Welcome back to the show. Dan Edwards here with East, and you are watching/listening to the Seattle's Eastside Real Estate Teams podcast. We're here next up with our good friend Tucker Maxwell from Guild Mortgage Company for our mortgage moment update. Tucker, how you doing?
Good, Dan. Thanks so much for having me today.
Well, hey, listen, I appreciate you coming on. You're one of our new guests to the show. We haven't had you for a mortgage moment. And as we jump into our main topic, I just want you to maybe give us an overall, how is the market for loans? How's business and what's happening just in mortgages and in your world right now?
Yeah, no, it's an exciting time to be in lending with talks of inflation, talks of the government pulling back their purchasing of mortgage-backed securities and what impact that will have on interest rates. And so it's exciting to, from our perspective, watch the impacts to interest rates as a lot of this information circulates, because we're seeing daily changes, drastic changes that are based on rumors or based on, the media's spin on what's actually happening. And so for us, it's exciting because the last 18 months have been a great market for lenders. Everyone has looked into refinancing. We've refinanced, most of the country. And so that's starting to change. Most people are refinanced. They're at a rate that is probably never going to be able to be obtained again. And so the market is now shifting back to a purchase-focused business, which, ties us in with our topic today in investment loans and second homes, because that's really the opportunity now. People have their primary residence dialed in. They got a great interest rate. And now they're saying, I got this disposable income. Maybe I should be looking into a second property, maybe, diversify that crypto money or Tesla money. And so it's a good time to be in lending.
Yeah, so let's talk about that. There are two different options that we're talking about. One is a second home and the other is an investment home. They're going to be different rates, different programs, correct?
Correct. Yeah. So a second home is essentially looked at as an extension of your primary residence. So like you mentioned in your introduction, in a warmer climate and a vacation destination where you plan to spend a few weeks a year in that location, and you have the advantage of essentially a primary loan. So low down payment, great interest rate on that second home, versus an investment loan where, as a lender, we know you're going to be earning income on this property. And so the requirements are a little bit different, higher down payment. We're going to look at reserves. We're probably going to charge a little bit more from an interest rate perspective because it is an income producing property. But the cool thing is that in most states, you can use your second home as a short-term rental. So maybe not, the opportunity isn't there for a long-term rental, but as long as you follow the state's guidelines in terms of how many days you do need to occupy that second home, the rest of the years is yours to do what you want with. And so we are seeing a lot of people convert their second home into a short-term rental that follows the laws in their specific state.
Right. And I think it's important to consider laws in specific states when you do choose. Like I said during the Real Talk segment, people are choosing their second home based on where they want to spend their second home time, right? So, they're not just going to say, hey, I want to buy in Orlando because Disneyland's there and it's going to be a great, second home place. Well, they're usually picking that because they like Disneyland and they want to go there every year. And what a great way to kind of leverage some of your love for that into an investment opportunities, being that the lender is comfortable with you doing what you are. And we'll have a guest on after the Thanksgiving holiday he's a real estate agent that I've connected with from Orlando that can tell you there are spots there that are not for rentals or short-term rentals. So it's in the CCNRs that says, nope, you can't do it. And then there are ones nearby that are. So it's important to consider that maybe you don't want to have that, then you're going to select a different community, different location. So yeah, that's great. So how does somebody go through the process of applying for a second loan?
So there's multiple options. So you have conventional mortgages or Fannie Mae, Freddie Mac mortgages that can be for second homes or investments. So it's really no different than somebody setting out to apply for their primary, home loan. We're going to look at the same documentation. We're going to pull a credit report and a 1003 or the same mortgage application. So it's really the exact same process for applying for the loan, the guidelines are what changes. For a second home, in theory, it follows your primary home rules. Once you're beyond your second home and you're buying your third or fourth property and it is a true investment property, that's where the regulations will change and you'll have a larger down payment requirement. We want to see that you have more skin in the game, right? If things get tough, you're going to protect your roof versus this vacation home roof. And so there's a little more risk there to the lender for default. And so they're going to look at not only your down payment, but they're going to want to see reserves that you could make the payment, for 6 to 12 months if something happened and you weren't able to get tenants in there.
Awesome. So based on, let's just say somebody happens on Thanksgiving to go to a location and they're thinking, maybe this is where we want to have our second home and they want to get a hold of you. How long is your turnaround right now from the first time you meet somebody, obviously to put out there and they get you everything you need? How long will it take for them to get a pre-approval from you at Guild Mortgage?
Yeah, a great question. So the beautiful thing about technology from a lending perspective is most employers are tired of receiving phone calls from us requesting verifications of employment. And so they aggregate that information. A lot of employment records today are done online. And so we can turn around a pre-approval in just about 24 to 48 hours because of all the automations that are available to us. We can, an applicant can apply online, give us access to all of their employment records, income, and assets. We can verify all that almost in real time as they're submitting the application and turn around a pre-approval very quickly. That does change. Let's take a self-employed borrower, for instance, or, on the topic, let's take a real savvy investor that has multiple investment properties. Now that does add some layers to the pre-approval and can slow it down, but I would say it shouldn't ever take more than about 72 hours to go through the full process, fully under it, and get a pre-approval.
All right, very good. Well, Tucker, we really appreciate you having you on for the mortgage moment. Before I let you go, if we're talking turkey, what is your favorite Thanksgiving dish?
I'm all about the stuffing. So my wife makes bread, and we put the bread she makes into stuffing. So I'm a stuffing guy, but really I load up the plate with everything.
Everything. Very good. All right, well, enjoy it. Now, if there is somebody that needs to get a hold of you, what's the best way?
You can find me on LinkedIn. That's probably the best way, Tucker Maxwell, or give me a call. My cell phone number, 425-757-9202.
Very good. Tucker, thank you very much for coming on today. We really appreciate it.
Yep. Thank you, Dan.